morning. And thank you so much for being part of these conversations and listening to the previous sessions very patiently. Just want to, check one thing that how many are the startups here, entrepreneurs type? Okay. And how many are the investors or maybe working for some VCs or family offices? Okay, one. Okay, so those who are startup, okay, second. So those who are startups, you know whom to catch, right? So, so friends, good to be here, and it's a very meaningful discussion topic today. The topic of this discussion is the rise of digital public infrastructure, devising profitable metrics, driving cost-efficient scalability through Aadhaar and UPI. And I think I have the best minds who can give purposeful information here. So I will start with you first in terms of the common question, then I will get to the specific question. And my common question to all of you is, generally, I think when you're starting a business, you develop a product, then you look at the infrastructure and then go to the market. But I think in the fintech space, what has happened is the government itself has made a public infrastructure available for you. And a lot of startups have got a great benefit of it. So I think anybody who could have maybe a Jordan shoes, Mac laptop, and a license to have a Starbucks coffee can just start his company because the infrastructure is available. So Riju, I will start with you. When this infrastructure, which is DPI, is available, how easy it is for fintechs to start its own company, make it profitable? Is it easy?
Yeah, I mean, definitely easy. I mean, how would be, I think, in our segment, for instance, so we are a payment aggregator. So, but in fintech in general, I think the cost of onboarding really goes down. I think, today we are a regulated company now, but we're still able to onboard merchants and they can start using the platform in 30 minutes. And that is because we heavily, index upon, backend APIs, and infrastructure like Aadhaar, GST, and so on, right? So the cost of onboarding really goes down, and at the same time, you can be within the envelope of compliance. And just the reach that you get, right? So, and you can, maybe compare places where, for instance, today, right? Opening a current account is not as easy as opening a savings account. And that's just because, like digital public infrastructure has just made it so much easier to open a savings bank account. So that kind of shows you like, like the impact that savings bank account has probably, that DPI has had in financial inclusion. So yeah, I mean, and like to summarize, I think cost of onboarding and the reach, that's what I think that what we are feeling in the fintech space.
Kunal?
Yeah. Our learning has been that I think the bar for entrepreneurship has gone up. So back then when I started our business, having something like let's say a digital KYC or having integration into a payment system was a unique thing. And we used to pride ourselves on the fact that we have a technology stack which allows us to integrate our credit products into into an amazing payment infrastructure. But now, a lot of these things are not novelty anymore if that's the only thing you're doing as a startup, as a company. The government has done, the NPCI, they have done a fantastic job in creating this infrastructure. So as an entrepreneur, now you are being questioned that, if you're starting a business, it has to have real value because DPI has made a lot of these infrastructure elements table stakes. Everybody has access to UPI, India stack, and so on and so forth. So I think the bar has gone up. What would qualify as a company, as a business, that bar has gone up significantly, which also is good because then it increases the quality of companies now coming into the ecosystem. But the ones who do come in with very clear vision that, look, I'm going to use this. This is not going to be a differentiator for me because it's available to everybody else. I need to create real value for customers. So I think net, the bar has gone up. As a result of that, the quality of entrepreneurs and companies I see would be increasing tremendously.
Tashwinder?
I think your question was, how easy is it to set up a new business, right? I think the answer to that is pretty simple. It's never easy, right? It's a lot of hard work, a lot of perseverance. I think some people gave some comments about what entrepreneurs should be doing, right? I think what's happened with the infrastructure, digital infrastructure, is that the highway has been set, right? But the highway is not is solving the last mile problem. And I think therein created an opportunity for us, for our business, right? I run a company called Neogen Fintech, which is focused on providing connectivity or providing the solution to the MSMEs to be able to deliver banking as a service solution to customers that live around that area, right? And I think the opportunity set got created. This business did not exist 5 years ago, 6 years ago, 7 years ago. This business got created because of the opportunity that got created because of the highways being set by the government, the India stack, namely, right? So I think it creates significant opportunity. Yes, it has taken some costs out of the equation. It has made people more efficient. It has forced people to think through real value propositions to build a viable business. So these are all very interesting things. So I totally agree with the comments made earlier that the costs have come down. Does not mean that profitability journey has become faster because competition has gone up. There are real entrepreneurs, real businesses that are competing for that space. So it's an interesting place, right? But the efficiency that's being brought in because of the India stack just makes the environment so much more interesting.
Krishnan?
I would say I'd echo what Kunal said. See, fundamentally, the information arbitrage has gone away. And what that has done is the bar on innovation has gone significantly higher. 6 years, 7 years back when we started Ring, instant seamless was a differentiator. It is no longer a differentiator, right? It's as utilitarian as it gets. So the bar on just being more innovative, which means keeping the customer in front and really saying what is it about you that uniquely differentiates you, has made it much more difficult to be an entrepreneur to start a new business today as it was, I would say, 6, 7, 8 years back. I think what has remained constant is, starting a business is just one aspect. I think the part which continues to remain tough, entrepreneurship is not about identifying the opportunity. It's a very small, important part. The journey, which means you have to be agile, you have to keep changing your business model, reacting to macro conditions. I think that aspect remains same. The 10, 15, 20-year journey is as tough as it gets. It requires perseverance. The idea or the opportunity is just a small part of it.
Sure. The whole idea was trying to understand because so many startups, new entrepreneurs are coming up because DPI is freely available and whether they can, view their business models and strengthen the profitability and sustainability. So that's what I was trying to learn from you, how easy it is. But now let me get into specific, and Kunal, let me come to you. So with DPI, which is available, onboarding has become very easy, going to market has become very easy. Does these platforms, whether you call it an aggregator or a new fintech company, has also the potential to scale up and maybe strengthen to a maybe 10x, 15x, or it just on the paper? Because when we look at India and Bharat, that's a huge, huge difference. People or fintechs operating in Delhi, Bangalore, or Bombay are not there in the, maybe beyond Pune, Nagpur also. So does they have a potential with this infrastructure available to hit the Bharat?
Yeah, I mean, it's a loaded question, Amol. The simple answer is that yes, I believe based on what we are building and what we are seeing, the potential is massive. You can build a business for Bharat. But I think it comes with a little bit of nuance and learning. See, I mean, for us, when we started out, when I launched the brand MoneyTap and then Frio as a neobank on top of that, we spent a lot of time, in fact, a few years in trying to zero down who our customer is. And we were very clear who our customer is not. And I think that was quite painful because on one side you can create a product which, let's say, you and me might love using, but maybe if you take the same product to a completely different geography, customers just don't see value in it. So I think as long as the products that you're building and the ecosystem that you're creating, let's say a platform, if that has products which are homogeneous for your customer segment, I think then there is value. We started out by being available in Bangalore only for the first year, and then we scaled up. Today we are present in 1,200 cities, more than 16,000 pin codes across India, from Andaman to Jammu. I mean, our products are getting used everywhere. But I think we've been very clear that the product is designed for Bharat. It is designed for a regular middle-income family, the kind of family that I grew up in. And I see that this product has value for a lot of customers, but not for everybody. So can the platform scale? Absolutely. I think there are some issues here. One is that we get tempted to use infrastructure and then diversify, and somewhere down the line, if you lose focus. So if you create a product which is very premium for certain customer segments, that adoption might be limited to only that customer segment. So for us, the learning was that people want languages. So we are present in 8 vernacular languages in all our products. It was important for us. So I think we have evidence, we make money, we have scaled up, customers are using it, millions of customers on a platform using it, they are paying for the products. So is it possible? Absolutely. I mean, Frio is an evidence of the fact that it is possible, but I think you cannot have products which are very diverse on the same platform and then expect the same customers to adopt very diverse products on opposite end of the spectrum. So you have to be really, really true to your customer segment and then ask the hard question like what Mr. Bhikchandani was referring to earlier today, that will it really make money or not? So as long as those questions are answered and you're being intellectually honest, I think the answer is you can absolutely scale a platform for Bharat using something like DPI and create really long sustained value.
Sure. Noted your points, Kunal. Riju, let me come back to you. So despite having half the infrastructure absolutely for free, the runway is free, and despite we have 26 unicorns, fintechs, there are hardly any who's profitable. I mean, very few companies are profitable. What could be the reason? I mean, you are a cash free. Is it you are believing in free cash, giving free cash also? Or more importantly, what goes wrong? Despite having this whole infrastructure free, why the companies or the fintech companies are not making, are profitable, not being very sustainable? What could be the reason? What's going wrong?
Yeah, I think it's part of the journey as the ecosystem matures. I think mindset is important. I think maybe 5 years back, 7 years back, profitability was not looked upon maybe as important. Like maybe capital was available, there were fewer startups. I think today, if you ask people, I think everyone kind of goes for revenue, right? As of today, I think every entrepreneur is very particular about revenue. Most of them are. So I think that mindset has changed today, I'm right. And once I think people prioritize revenue and those metrics, I think the revenue will start coming, right? Like lean growth, frugal growth, right? Not, like hiring excessively, for instance, right? Trying to be more protective. So yeah, I think that I would say it's a mindset thing. It's nothing that can't be achieved if you really prioritize it, right? If people have prioritized growth over profitability, maybe today people will start, prioritizing business models that are unit positive and getting to profitability faster, right? So yeah.
Okay. So Tashvin Jarji, from where we started, when you look at the fintechs, wallet to payment to lending, now everybody is heading to the lending space, and their target audience is basically SMEs and MSME. You're operating in MSME space where I understand the demand is very huge. And with GST and everything, I remember an interesting quote by Mr. Nilekani. I had an opportunity to moderate a session with him where he said that India is moving from an informal economy to a formal economy. And that is where MSME is at an integral part, where fintechs like you are also lending heavily. Lending to MSMEs, do you think is a sustainable and a profitable model going ahead? Because everybody is jumping on that bandwagon now.
I think lending to MSMEs is not only viable, but I think it is an essential part of what this country needs, right? India fundamentally is a capital-starved economy, as most of you appreciate, right? And if you really think about how lending happens when you start going into Bharat, the point that you mentioned, right? There is a significant informal lending mechanism that exists in the country. Getting people into the mainstream has been one of the tasks that the regulators have been trying to do. We think it's a significant opportunity for us. If I just look at the two parameters on which we run our business, right? One is we keep the MSME in the center, and then we look at what can we do for the MSME. One of the functions that we do is the lending proposition, but prior to doing the lending proposition, we are looking at ways and means of giving income augmentation to the MSME. There are 63 million retail outlets in the country, give or take, right? Converting each of them to be able to deliver banking services, so making them as partners in a banking as a service, gives them income augmentation. You create that income augmentation platform, it allows you to collect data which is unique to that MSME. So you're not depending on, basic old school data of looking at just his balance sheet or his P&L, but you're actually looking at transaction data. And using that data to then underwrite credit just makes it a significantly better way to provide credit to the MSME segment. So, lending fundamentally has three elements, right? You are originating, you are underwriting, and you are collecting, right? So the origination, again, I think technology is providing significant methods for us to originate, right? For customers to be able to reach out to lending institutions. Underwriting requires differential data. You need to have incremental data to be able to believe in your underwriting capability, especially when the data that people normally provide is not necessarily dependable in the smaller segment. So you need to create your own data. And then collection again becomes easy if you have the platform through which you can collect. So we think it's a significant opportunity, right? But you have to think at lending to the MSMEs a little differently. I do want to also address the question you asked earlier about profitability in fintechs, right? I think the market has moved from market share focused to unit economics focused. And the future lies in looking at operating leverage. So those companies that are focusing on unit economics and have positive unit economics, as they develop scale, they will show operating leverage and then they will show profitability. That's the sequence of how things are going to play out for fintech profitability. Lending is going to play a very, very important part because just the way the ecosystem is, the returns that you can make from a lending proposition are way, way more than what you would make in a payment infrastructure process where you're making a few basis points, whereas in lending, you're making 100, 200, 300 basis points. So the economics are very much in favor of making money. Thank you.
Okay, meaningful one, Ashwin. Krishna, you earlier spoke about the journeys and how important those aspects are. So with whatever the infrastructure was available, whatever the ecosystem was available, and the support that we obtained and received from everybody, from 0 to 1, the journey was not very difficult. But now, what next when you have to move from 1 to 10? Because the dynamics have changed, regulators have been active, investors have been really wise. So will it be now difficult for fintechs to cross the ladder with the same speed which they were going through?
Yeah. So the journey is going to be, I would say, more difficult, but more predictable. So let me lay out, if I were to summarize fintech in the last 7-8 years, it is a journey from nascency to a level where we are genuinely a sub-industry within overall BFSI. And if I talk about lending particularly, many of you will be aware there were the digital lending guidelines that came out last year. I think it was an acknowledgement by the regulator that this is a formal industry now. I need to have a very, very specific set of rules governing this industry. What that means for organizations like us who have, I don't know what scale 1 to 10 is, but assuming I'm at 10 right now, I still have to get to 100. The journey from 10 to 100 is going to be more about governance and compliance, right? And that is different for us versus say someone who's starting a journey today. Being very candid, governance and compliance was not DNA to us on day one. But if I were in a shoe for a company who's starting today, it has to be a day one DNA that as I think about growing, I look at governance, compliance, very, very important to begin with. I think the second part is, and this is the flip side of DPI, right? And all of us to be conscious about, DPI does make customer data very easily accessible. And I think it's a problem that the government and regulator are trying to solve, but we as self-regulators need to do. How do you ensure confidentiality, privacy, and control on this data is absolutely crucial, right? One of the oldest public infrastructure we've had in this country is the Bureau Infrastructure on Credit, right? Let me say it's easy to get that data for many players, regulated players, non-regulated players. I think, and that same risk is there. And therefore, just being responsible about privacy concerns of the customer is another thing that entrepreneurs need to factor in as you think about, because a lot of these things as growth becomes a primary concern is not something that we look at before it's too late. I think the last few months is a big testament to say we are a very mature industry now, and if we are not, we are probably signing our own epitaph. Yeah.
Sure. I have many questions. Time is slightly limited. We'll shoot one question to one panelist, and maybe you take 1 or 2 questions from the audience. So be ready with your question. I'll ask my team to get ready with the mic. So Kunal, Krishnan said that it's not going to be easy journey, right? And a lot of fintechs have already realized that, specifically after the big case that we all know. My question to you is, how difficult will it be now? Because the dry powder is now limited. That's what I get a sense from a lot of investors. And on the other side, SRO is coming, regulators are active. So how difficult the journey will be when it comes to profitability and sustainability? Because those are the two metrics which everybody will have a benchmark to judge on.
Yeah, I mean, when you ask an entrepreneur a question, how difficult it's going to be, I think the answer depends on, the day or the time of the day, right? At some level, entrepreneurs are irrational because they love the pain. The higher the pain threshold, the more they get charged up. It is not going to be easy to create sustainable businesses which can actually create profit and value for shareholders. I think it's a very important thing to understand that ultimately the value of the business is to create value for customers and for shareholders. The objective is not to create value from shareholders, as in take investor money and then, not think about the business. It's the other way around. It's going to be difficult. There's too much noise out there. Lots of businesses, lots of startups, the ecosystem, media. I think it's difficult to separate what's good, long-term, genuine value from what is not. It's like buying a product and you fall in love with the product when you see it on the shelf. You maybe buy it, wear it for the first time. The second day onwards, you hate it. But you'd never know till the second day comes. I think the same philosophy holds true for businesses as well. I think anybody who understands that they are in it for the long, playing a long-term game, and who are willing to go through market cycles. So you have to go through bad patches, bad cycles. I think for the past 6 months, everybody is in a mode where they love to hate the regulator. I don't think that's something you can blame the regulator on, because they're doing the job of making sure the systems are clean, the economy is protected. So it's going to be tough. It's going to separate real businesses from those who are chasing intermittent milestones such as only valuations. It's going to be about people who create and chase value. And ultimately, it's about people who are staying in the ring. I mean, if you can get beaten down, but if you're in the fight for the long and if your customers pay, then it's going to be success. But it's going to be a long haul. It's not for people who are the faint-hearted. It's not for people who are chasing some vanity metrics. I mean, that's the honest response.
Great. Sure. Any question? Anybody has any question? Yeah. Can we have a question here? Can you have a mic here? Yeah. Yes.
Hi, my name is Dr. Subhi Chaturvedi. Excellent moderation, Amol. It's never easy. Being an entrepreneur is always a lonely journey. But as you look at DPI, you're only as strong as the weakest link in the chain. So maybe Riju or anybody from the panel can take this. Do you see, as far as growth mindsets are concerned, this is not an either-or conversation. Krishnan, you hinted at compliance and governance. Building capacity for the regulator, are you seeing more conversations in your boardrooms and in your teams? And does policy capacity building now come at the front seat vis-a-vis growth and chasing numbers in P&Ls? Thank you.
Are you working with regulator or something?
Yeah, so I would only say good things about the regulator, but no, honestly, they're doing a great job. Yeah, I think with us, I think we have embraced compliance, right? I think it has been a learning experience for us. When we started, there were no regulations, right? So, and I think suddenly, like last 3 years, I think the regulations have become very articulate and very detailed, right? And our interactions with the regulators have increased. So we have embraced that. I think I personally get involved in compliance as one of the founders. And when I go to a college, let's say, and I told them, like an MBA college, why don't you consider a career in compliance? Because we actually need, there is a dearth of talent, right, in compliance who are actually excited about it. So I think it's here to stay, I would say, and we've embraced it, right? Yeah.
If I can just see, when you look back, the cost of compliance is actually not very high. It's been short-sightedness from all of the industry players. A lot of it is also driven by, I think, to Kunal's point, have a view on ups and downs. And oftentimes the need to address a short-term dip and it's an investor-driven pressure or maybe a self-created pressure on the entrepreneur that makes you take shortcuts. If you are really in it for the long term, the ups and downs is something collaboratively an investor and the entrepreneur has to understand is part of the game. And then you realize it's actually not such a big burden as you thought it was. Yeah.
One quick question. The time is up, but I will just stretch for a minute. Yes, the gentleman there. Can we have a mic?
Hi, good evening, everybody. I'm Hitesh from Vina, and we work with supply chain finance. My question was that Riju started off that, while DPI has done a lot, things haven't really changed when it comes to opening a current account, and things haven't really changed when it comes to lending to MSME as an entity and not, the sole proprietor. And a lot of times personal loans get masked as, business loans. Do you think DPI is going to help change that scenario anytime soon?
Riju or maybe Tashwinder?
I'm not sure anyone wants to take a shot at trying to predict what the regulator is going to do. So I don't think we can answer that question. But I think there are efficiencies coming in everything that we do, right? Now, one can argue and debate, is the state of efficiency or the speed of efficiency or the speed of innovation good enough or not, right? I think there will be changes. There are enough and more portals that are allowing you to open savings account because documentation required is much lower than in a current account where the documentation required is there's more paperwork required. But with, good, I've looked at some very interesting AI-based OCR technologies, right, which are helping make this process so much faster. It's not a regulation that is changing. It is the innovation within the rails of what regulation allows that will change and that will allow for efficiencies to come in. So I don't think we should wait and expect that, the regulator needs to give more direction on this. Within the rails that are provided, we have to be steadfast about innovating, right? Now, innovation does not mean disruption. I do want to bring this point out here, right? And to the first question that you answered, right? One of the problems we faced is, we keep thinking that the regulator is here to spur innovation. The regulator is not here to spur innovation. The regulator is here in a protective capacity, right? We are required to give innovation within the rail guards that have been provided by the regulator. So you will see innovation that will come in. If the regulator decides to make some changes in terms of documentation required for opening current account, so be it. No one's going to be able to predict when that will happen.
Sure. Thanks friends for those questions and your participation. I think in general, my quick observation, not only from just panelists, but the dozens of fintechs I regularly in touch with or speak to, the commentary, the narration has been changed dramatically. Earlier they was talking about 10x, 50x growth and GMV and God knows what. Now, shareholder and regulation has taken a central stage in their business models. Obviously compliance and all other factors, but shareholders' value and regulation has been important point. Thank you so much for listening to us very patiently, and thank you so much, Riju, Kunal, Tashwinder and Krishnan for sharing purposeful and meaningful thoughts here. Thank you.